The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. This is Basil Chapman. This is the early edition. This is the 8 o'clock edition of the Tiger Technicians Hour. And good to get an early start. The futures in the Dow are up 51. You can see this right here. What's fascinating is that within the context of the techniques that I talk about all the time, there's a pattern that I call the falling axe. Basically, that's just a nickname that I gave a particular pattern. And that pattern says, if I can just find this right here, I'll bring it over and show you exactly what I'm looking at. Look at this pattern. Look how many times it gets repeated over and over and over. If I can just click it right there, it is. So what happens is the price goes up and then it stalls, usually at a peak D, E, or F, the fourth, fifth, or sixth highest peak. And then what happens is it starts to come down and it makes lower highs and much lower lows. And it looks like this. So you're going up, then you come down, and the top part of it shows you that it's making lower highs. The bottom's making severely lower lows, and then all of a sudden it stalls and starts to make a cup formation. How and if it's able to pierce this expanding, declining cone, that trend line there is really important, because if it's able to get above it, then you look at the left side for peaks that could be targets on the upside. But at the same time, this trend line becomes what was resistance, becomes support. What was resistance, if there's a break in the next week or two above 32,800, I'm talking about the futures right now. I'll show you the Dow chart. There we are. If I can go there right now, let me do that. There it is. So the Dow chart is the daily on the left. In the middle is the weekly. You see that because the weekly, it had this incredible resistance ever since the high that was made back in January of 2022 at almost 37,000. Now look what's happened. 36,952 January the 5th. It comes down, 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 down. And all of a sudden, it breaks out in October after that spectacular run from 28,660, runs all the way, gets almost to 35,000, pulls back, and now this whole area has become the support. That's number one. Look at the S&P. I spent some time yesterday talking about the S&P. I had a question about it from one of our listeners. And this Tiger wanted to know, I'd mentioned you had mentioned the falling axe formation. Does that become a resistance? What exactly happens? Well, I was discussing this yesterday, and I said this inside track, I call this green and red, this narrow little channel here at the upper part of the expanding cone formation, resistance. I said that was perfect resistance right there the day of the 6th of March, got repelled right at that level. And yesterday we went just slightly above. Then, of course, all the Fed speak and Janet Yellen, whoosh, we come down sharply. So this is now your inside track repellent zone. It's the falling axe breakout level. A lot depends on whether the Dow, and I need speed now. I don't want to have this sharp move to the downside. I would like to see a reversal to the upside starting today or tomorrow. And by next week, we're trying to push into at least halfway, very early on in the week, halfway into this almost like an inverted Chapman wave Roman candle. But let's just say that the most important thing is how we can tackle the 39.90 level and that's almost 60 points above. Whoa. That's going to be tough, but that's what you need to see. The MACD did turn positive. The stochastic's still very negative. The stochastic's negative at 54%, but is improving. That on-balance volume is not showing us the kind of strength that I would like to see. So and here's the weekly chart. Look, that was a repellent, then it became a propellant, and it's remaining a propellant, except this is Thursday. We haven't started the actual cash S&P day today, but already the 9 has slipped underneath the 14, and that says just be really careful, all right? And if you look at the QQQ, which is the index 100, trading vehicle, or 1, 2, 3. There we go. The QQQ is trading up 283 pre-market, and this is at 8:23. Oh, no, 23 is the date. 8:11 this morning, which will be replayed. It'll be 10:11 later on. I'm hoping that in the hour that I normally do the show, 10 o'clock to 11 o'clock Eastern time, that the Dow futures it's translated to the cash, and that the cash is up 50 to 60 points at that particular time, attempting to rebuild and get at least some of the and as I say, I think it was an emotional sell-off yesterday. We started off, the market kept going higher and higher and higher. We bumped into that resistance I was talking about a moment ago. And then what happened is, within the context of news, the market started to decipher. And then I believe it's Janet Yellen that spoke about really part of the financial aspect, really dragged the market into that hysterical last half hour crash it wasn't a crash, smash to the downside. Question I've got here is, yeah. Okay, yeah, thank you. Yes. Really, someone was mentioning Diana Krall, fabulous musician, wonderful pianist, lovely voice. I really enjoyed listening to it. So now look at this, the QQQ. I'm going to go to the NQ, the futures in a moment. Because of this peak G in the Chapman wave, there's never an H at 313.38. Everything about the technicals, look, the MACD is good in the Qs, the daily chart. The 9 is way above the 14, 9-period moving average over the 14. Price is way above the 200-period moving average, which is now key support 297. The stochastics flat at 87%. Let me go to the ES. I'm going to go to, this is going to be the continuous contract. Now, the continuous contract of the E-mini has not gone above the pink. It's still pink, but the NQ, and this is going to be really important, is very strong. Even today, it's up 107 at 12,814. And just for disclosure purposes, we actually do have a position now in the QQQ. The stochastics flat at 85%. The MACD's expanded. All I can say is that on a purely technical level, I love the fact that what was the laggard has become somewhat superior in chart formation and in action over the last 2.5 weeks, and that is the QQQ, that's the NDX 100. It's really important. If you put it together with the SMHs, which is the semiconductor index, which also broke above that 255.64 February the 2nd high, this could be an alternate count E/B. I'm calling it B for now, but I love the technicals, and the weekly chart is confirming everything about it. And it's really important to me to see the technicals being confirmed in the semiconductor index, the SMH, and the QQQ at the same time. And I like now to see the leadership move over to the QQQ, because that's telling us that in this whole financial, the perspective that you get looking at the financials, that's one separate unit completely, and that independently you're trying to get the index a higher beta stops. I'll be back in a moment. The futures are Dow's up 42.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Morning, everyone. Basil Chapman here, and we are looking at the Dow futures. This is the early edition. This is 8:18 in the morning. It will be replayed at 10:18. If the futures, which are up right now, I think it's going to be a bit of a struggle early morning, that early spike, and you can see that if I show you the E-mini at this time. Look at this. Here's the E-mini. I'm showing you right here. There's that smash to the downside, failed at a peak. B minus is the only way I can count that from the 200 period. Moving average is a 10-minute June E-mini S&P, and it went to a peak B minus because that was all Fed related stuff. Occasionally the Chapman wave does not go to the full peak D, which is the obligation of a buy signal to buy mode, but it failed at a B, and then it smashed down from the 460s, maybe 470. What was the high? I can't remember. Actually, it was very interesting because I was at just at a routine eye exam, and I had the drops in, and I could barely see, and I'm looking and I'm following all this stuff, and I'm thinking, oh my God, what a beautiful trade that could have been. And I'm out the office. I'm at the doctor's office, just getting this checkup, and I'm watching smash, and then towards the end it gets, and then look what happened. From the low, the doji candle low that was made at 410 yesterday afternoon at 3966.25 is a very slow creep. It did not get to the full candle that I would have liked, the 10-minute candle that had a high of 4,004.25, the actual high at let me just get there, at 250, 10 to 3, was 4,073.75. And I would have loved to have seen, I love to do this. I grab the outer bands that can be made from a huge candle, and it almost got there. Not bad. Okay, it didn't get there exactly, but it did get close to the 200 period moving average, which is at 4,001. So we're looking at this. It's sort of stuck in a range right now. I think it's waiting for things to happen. My bias is, and this is what I wanted to do, I'm going to go to a whole bunch of other things, but I thought I'd do this because I cannot do my market overview video, my about an hour long market overview that I do on weekends for my subscribers. So I'm going to do this part of it right now because this is what I wanted to show. This is the E-mini. This is the 1 minute. You see these patterns get repeated over and over. You got a peak D, E, or F, and then you turn down sharply. And now you're stuck in this range. And it should try to make its way to the 39.94 level in a cup formation. So this is what I wanted to show you. Look, I believe that the low that we've made, let me just get this right here. Actually, I'll open it fully. This is a chart that I show subscribers, and I show it here periodically. This is the Chapwave Dark News Cloud cover using the Dow Daily chart. So this goes back, way back. You'll see it. This is a daily chart, but it goes back and back and back. May of 2021. Look, Dark News Cloud cover, May the 10th, 2021, make an internal low, then a residual low. Rally sharply, then I put Dark News Cloud cover August, internal low, residual low. And it's the same thing on the upside. I just don't want to make it too messy. And then we make a high, and 8th of November, I said, I think this is a Dark News Cloud cover, so we make an internal low. This is like an earthquake and the aftershock. And then you get the residual low either at, just above, or just below the previous low. Then we go sharply high to the January high, January the 1st of 2022, internal high, residual high, plummet down, internal low, residual low. Remember, that was that March low. And then we had a book. And that's why this month of March is so important to me. March and October, we rotate through those, it can go on for years. And I'm not sure if this March is going to be the same thing, allowing us to have a decent rally going out of March. We'll see. But in the meantime, to get to where I wanted to talk about, this is this huge upside, and this is what I think has been a rotational internal low and internal series of lows and highs, and then it broke down from the support level. Now I think we've made an internal low. Whether we break down and test this major trend line, declining trend line support is going to be important to see, or whether in the next day or so we make some kind of a residual low which is above the internal low that was made, and we start to move up. But because we've gone underneath the rectangle support level, that makes this whole area of maybe just popping into the back again where we were yesterday, into the 32,700s, and then come down one more time, is going to be very important. If we can get to the halfway marker of the rectangle, which is way into the 33,000, well, we did that back in that huge turn down that we saw on the 6th of March, and that was at 33,500, 33,600 in that area. I just don't know. I'm just going one step at a time, and I think that from my perspective, there are enough technical strengths to at least hold the market in this, keep it maybe even a holding pattern rather than to smash to the downside. I think that yesterday was one of those emotional sell-offs where the technicals were still strong. So I want to show you U.S. bonds. I went to the 200-period moving average, plus it went to the trend line resistance and failed a number of times, and now it's trading up 630 seconds and 131 and 530 seconds. But if you want to look at something very interesting, look at the yield on the TNX, which is the 10-year, and that's really where a lot of the your goods, the how can I put it this way? A lot of the 10-year is where your yield is, or this is the payment that you'd make, the rate that you would be paying is really based on the 10-year for many of the things that you'd buy, credit or whatever way you do it. And look at this, 200-period moving average became support at 34.68, 3.468. And in this particular instance, you've got your smaller arch formation. I always talk about these H patterns, lowercase h, that can go to an M pattern. So here's your H. And now there's an even larger H right here. And the week is still got a whole 2 days to go. But you can see that the 9-period moving average right at this moment, it's a weekly chart, you have to wait for the whole week to finish, has got the 9-period just underneath the 14-period, and the MACD did deflect. So I'm looking at this and I'm thinking, there is a chance that there's more of a bias towards I'm talking about the yield, 10-year yield, as I'm looking at it, to hold in this area with 3.412, 3412 as the 200-period moving average key support. A break under that says, wow, now we can revisit that 33.34 low that was made, I think it was the end of, right there, end of January, beginning of February. It's February the 2nd, yes, at 33.34. So that's just telling you that a lot of things that you would be expecting if you go to the housing market, HGX.X, this is the Philadelphia Housing Index, HGX, there you are. It's almost the same thing. Look, the yield almost looks like the Philadelphia Housing Index on the daily. Look, there's the 200-period moving average of 418, and it's trading at 429 right now. And when you think about what's going on, I must say I'm kind of impressed that the weekly chart of the Philadelphia Housing Index is actually holding as well as it does. I'll be back in a moment. Basil Chapman, early edition. Check out my opening call, my daily newsletter. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Chart allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So a couple of questions came in. Let me get to it right now. So crude oil is down 33 cents at 70.57. Really nice V-shaped recovery in the on-balance volume, and that was at the almost that was a day earlier than the low. The low itself in the continuous contract of crude was at 64.38, I think it is. Is that right? 33 on the 20th. And then there was a really nice rally to the upside. Good 3 green candles. Today it's trying to make a green candle, even though it's down. So what I'm looking at here in crude oil, if you look at the weekly chart, we almost made the one-to-one to the downside, that propeller shaft pattern that I was looking at the other day when I had a question about it. And I said, I think it can go to the 62 area, maybe even 60, but 62 would be my target. It did get down to 64, and now it's trying to bounce. What's really important is that monthly chart is just so weak that it's suggesting that there could be rallies, but until I see the weekly chart helped the monthly chart, and the weekly chart can only be helped by the daily chart. And if you look, the weekly chart saw the stochastic rally nicely, saw the MACD flatten out, actually go positive, and yet crude oil still dropped sharply. I would tell you that looking at crude oil, unless there is something that happens, a geopolitical conflagration, something that says crude oil is in demand only because there could be a shortage, I'm looking at this and I'm saying, I think crude oil is just stuck. I'm not saying that it's at this point it can go down to the 50s. I'm saying I think it's stuck. And yes, you could take rallies. Now, on a very short-term basis, the histogram of the MACD is starting to improve. The on-balance volume is really nice. The stochastic, so the stochastic's at 29%. It's still very low. I'd much prefer to have it even in the 33 area to 35 at this particular point with this kind of rally. But I would just tell you that the 9-period moving average, where it is right now at 70.60, no, I'd say 70.80 is the resistance on the 9-period moving average, and 71.86 is the 14-period moving average, the black line. So until you can see a good rally that takes the pink 9-period moving average closer, yeah, it needs to get to about 71.57. All I can say is that at this particular point, you could get bounces, but to have a really decent move, and when you're talking about gush, that's just a trading vehicle. If you want to do the gush, that's fine. But I would just say to you, use them as trades. I think that's exactly what you did because you took real nice profits. So what you want to see, maybe I should just I'm going to go to just for the moment, I'm going to go to the 10-minute chart. So the 10-minute chart, I've got gold. Gold's just dropped sharply. It's up $28. It was earlier up at 1986. Now it's at 1977. Made a peak in the 1-minute chart. And I was showing this. Now I'm going to use this particular chart to go to gush. And it made a peak E in the 10-minute chart. Now it's got very important support right here. Let's go to oil. CL, this is the continuous contract. Oh, very nice. Peak A, peak B. So I'm suggesting to you that the high that was made at 10 to 5 this morning Eastern time at 70.79. We're real close. That's going to be the key. A, B, C. If it does that in leg C, it says that you've now raised the support to 70.47. And if you can see, I wonder, I haven't got it in front of me, the futures. I'm using the continuous contract. It should be very close. So yes, I can see a trade, and I can also see that crude oil on a very short-term basis is showing upside. Look at that. Peak A, B, C, D, E. Peak A, B, C, D. Peak A, B, C. This should also go to a D since it's done that. But the rectangle that I always draw, that's going to be key for you. Watch it closely. You've got your left side, right side. This is the 10-minute chart, and it's lopsided. It's the gravy cup. Remember, the gravy cup gives you a lopsided U pattern. And I'm going to take it to that candle right there, the doji candle, just to make it look even. Taking it to there, I'm going to draw in a left side, right side price time match, and we'll see if that works out. It should do it in my show. Should try to get there. Oh, it could be exactly what I'm looking at here. Okay, there we go. Now that should take you to, no, it won't be my show. Oh, 10 o'clock. Oh, this is a 10-minute chart. So I'm going to make it shorter than that. So I'm just going to say to you, if you're looking for a new trade in gush, you've lost the best entry point. The best entry point would have been on the sharp pullback to the 200-period moving average at about 69.90 on the continuous contract. But I'm suggesting to you as a trade, yes, it's looking way much better, but I'd only treat it as a trade. And that was the first question. And what would I be looking at? I go back to the daily chart, and I'm just telling you now, if today's Thursday, actually, no, let me do this. Today's Thursday, if by Friday at 2 o'clock, crude oil is trading, the continuous contract has gone above 72.15, in other words, 71.87 is the black 14-period exponential moving average in the day. If it's managed to get there, it doesn't have to close today, But if on Friday it's gone above that, it looks like it's going to close above, that would say that by Monday or Tuesday, there should be an attempt to see that pink 9-period moving average getting closer to the black line. If there's a failure, I would say 69.30 on the continuous contract, that must not be taken out. If it is, that's much more serious. Next question came in, could I look at the dollar? I actually want to do, if you don't mind, to do the dollar, I also want to do gold, GC. That sharp pullback, that multi-point pullback from the 2000, and this is the continuous contract from 2014.9 on the 20th. In 3 days, actually more in 2 days, it gave back all of that big gain from the previous session. But look at this, it went down to 1938, and the next day went to 1936.5. That's yesterday. And today it gaps up and it's gone above yesterday's high. So that's just telling me, and I've been saying this for a while, that the GDX, which is the gold miners, which is not participating as well, because I'm seeing gold as part of the bank index. It's the financial crisis. The financial crisis almost always sees gold take the lead, because that's your go-to insurance policy. Around the world, countries look at that. And really huge institutions, I think they're buying gold because they're very, very much afraid of the financial situation. And that's what we're seeing. That's why the GDX gold miners is lagging. It's still looking quite good, but it's lagging. And if you look at silver, silver is actually playing catch up. It's now in a leg D in the Chapman wave, always looking for buy signals to go to a buy mode, taking you to a D. That's where other things can happen. So we're watching this very closely. If today the general market is able to overcome yesterday's sell-off and get back at least part of the last hour's huge sell-off, always talk about in the last hour, big move up, the next session should give back at least 20 to 30% of that last hour gain. So we should be able to get something back on the upside from the last hour sell-off, and then we're going to see what happens. The real session today for me starts, I won't be able to see it, but it will start at about 11:30 to 12:15, probably during Steve's show. That's going to be where you get a lot of action. Should be a great show. That's the time you want to be looking at. So this is what we're looking at. Silver's playing catch-up. Now we can go to the dollar, because there's this relationship. Oops, the dollar right there. So the dollar tried to rally yesterday a little bit, but if you look at the dollar's got this pyramid pattern. It's almost like an inverted A, uppercase A, and it's trying down 19 ticks at 102.37. I'm looking at this weekly. The weekly says it really wants to come back to test the 100 level, and then it's not showing strength at all right here. So in terms of the dollar, I'll do the euro and the rest when I get back. Basil Chapman, early edition. I'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. Early edition. Dow futures up 46. The S&P futures up 19. A little bit of a rebound from yesterday's big smash, which I think was more emotional smash to the downside because there were a lot of good technicals. I'm still favorably biased towards the upside at this particular point. We'll see if I'm right or wrong, but that's what I'm looking at. So we're looking at the dollar. We have to also look at the yen. This is the US dollar, Japanese yen currency pair. And you can see that the base, this is going to be important, that the low of the 10th of Feb, which was at 129.81, that holds. We're trading at 131.64, up a little bit, about up 0.13. So the way I'm looking at it, the stochastic at 16% is trying to turn up. The MACD is still very negative. The 90 is still way under the 14. The price is way under the 200-period moving average. If you put it together with EUR USD, which is the euro, look at that big spike from the 200-period moving average. This is a brand new, from a trough F. This has to be a leg A to the upside. It doesn't mean to say it's going to go peak A, B, C, D, but it does say, hey, keep your eye on this because that's a pretty decent, the stochastic is at 85%. And that tells me the strength in the euro right now, you almost got a cup formation, the inversion of the arch formation in the weekly chart of the dollar and the yen. You've got the euro trying to get back to this, and this candle, if the euro is able to trade for one whole day and close above 1.09, it's at 1.087, then there's a real good chance that it's going to try to retest the 1.103 high that was made in the week of the 3rd of February. And this is a single leg A to the upside. A's can fail when they're this sharp. That makes 1.07 really important, 1.074 really important support. So that just says I don't really see the dollar moving much higher other than a little bounce at this particular point. And that really favors gold. And if I'm saying that, then I have to look at the XLF and say pre-market it's up 21 cents to 31.43. But look at that move to the downside. This cluster pattern says, and I drew the arch formation, but it didn't take out the left side low. Stochastic's flat. And I'm going to get to Mars in a moment, the Mosaic company, but I'll show you a flat stochastic. The flat stochastic at 9%. Remember the opposite. This is the opposite when I say over 80%, especially over 85% in the stochastic is really bullish. That's what you want to see. No textbook ever tells you about that in technical analysis. They say it's overbought. Overbought means it has to come back, right? No, it's what you want to see. So under 10% in the 10% on the way down says there's very little strength to the upside. It's going to take a really big move, probably from the 31 to the 33.80 level, to really see the stochastic break out and start to move into the 17-18% area. So that's just telling. That's one of the reasons why I think that gold remains the place that you can see as in your insurance policy. This is like it attracts money. as soon as the financials start to show some deterioration. So now I can go to the MOZ. This is the Mosaic Company. Is that what that's right? Yeah, the Mosaic. Let me find the Mosaic Company, potash, phosphate, fertilizers. So you can see this arch pattern in the weekly, in the monthly chart. You can see the weekly has already made one arch pattern, tried to rally strongly, and then it plummeted down. To me, this is just talking about international weakness in markets and the economies. So I'm just looking at this, and I'm suggesting to you at 7% in the stochastic, you might get a bounce or two, but this is not going to really. I'm going to say maybe in 3 weeks' time, maybe in the middle of March, somewhere in the middle of April, on tax day, I can see at that point enough energy rebuilding in Mosaic to maybe move higher. But until it can start to trade above the 200-period moving average of 49.50, I mean trade on a weekly basis, I think it's stuck in the lower range just for now. So I hope that helps you. Next question is, it was somewhere else. Oh, the VIX index. I just do this quickly because the VIX index is so ephemeral. I mean, you never really know. Look, the VIX index is down 1 at 21.22. Even yesterday with that sharp sell-off, the VIX, I have to tell you, if I'm reading this purely chart-wise, if I'm trying to do this as objectively as possible, I'm looking at the VIX index and saying, with all this we hear, everything that you read, why aren't you up in the 24s, 25s? And all I can say is that the majority of fund managers had looked at it earlier in the last week and a half and were buying insurance, but now they start to say, maybe the market's holding a lot better than we thought. Because that's what they're saying to me. Maybe I'm reading it wrong, but look at this. Look at that monthly chart. I've drawn in this cup formation. If it's at any point in the next 2 weeks, if the VIX closes under 18, that's going to be really positive for the markets. And one of the reasons why we didn't add any shorts or anything over the last couple of days, in fact, we've been buying, and we're waiting for dips in some areas to buy. And one of the reasons is I love the fact that the SMHs, the semiconductors, which lead the markets on the way up. Remember, I look at the chips as the oil of the 1900s and early 2000s. As far as I'm concerned, they are everywhere. Therefore, in each sector within the chip sector itself, you're going to get some companies that have been able to do cost-effective planning, etc., and are going to do really well. But the commoditization of the semiconductor, we spoke about this, I don't know how long I've been talking about the commoditization of semiconductor chips. But within that, you still get your competition, you still get your leaders. Why on earth is Intel trying to move here? Because they are finally starting to do something. Like IBM finally is working the cloud so that they are starting to see a benefit after all these years and decades. So Intel finally, after all these decades, I think might be our dear friend Dave White used to speak about this all the time, that he saw nothing in Intel. Then one day I heard him talking about it and say, hey, I think they might be doing something for the first time that I can actually say, I can put my finger on and say, this is a good thing for Intel. So here we are. Intel's just trying to get off the ground. But look at what's happened at Advanced Micro Devices. Look at that weekly going from the 50s to the 90s. We're at 100 today, 100.20, up 2.62. I don't think you can ignore this. Yes, it is leg D and makes it a little bit vulnerable here. Look at that beautiful cup formation. But at the same time, and it's leg D in the monthly in the weekly chart. But that high that was made at peak A- failure back in the week of the 5th of August of last year at 104.59. How we deal with that, how we can get there and then deal with it, that's going to be important. Look at NVDA. And I know I have a particular person who's always saying, no earnings, no. I don't care about that. There are some in the stock market, 5, 6, 7, 8, 10,000 stocks. You're going to find stocks that move up. They don't. I mean, did Amazon have profits? No, they plow the money back, and what an incredible company that is. So NVIDIA made a doji candle and a peak F. I think this is going to be an alternative count because it's up 6 pre-market at 271. I like what's going on just in terms of the rotation through the different sectors, the rotational market ever since 2009. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, as we wrap up this segment, we're going to go to Tommy Jr. His morning market kicked off fabulous. Boy, he covers so much. He talks technically and he talks fundamentally. It's really good to hear because sometimes you want to be able to put together a picture that says there is a background from which you can look at markets and stocks and whatever you're looking at that gives you both historical context, current context, and then the charts should fulfill or at least give you an inkling as to the directional move. So I love that show. And of course, you've got then you've got my show repeated, and then you've got, let's see, that goes straight to Steve Rhodes, and then you've got Think or Swim, you've got Larry Pesavento, and then, of course, Tom O'Brien wraps it up. 3 o'clock to 4. Check out my opening call, my daily newsletter. Now, I'm not trying to be sanguine or anything. I'm saying that from my perspective, I'm liking what I see. I do see the potential for downside because these weekly charts are going to take quite a lot to repair the damage that's been done, especially the Dow did that arch formation, dreaded H, took out the left side low. But in the meantime, if you look at the middle chart, which is the weekly, look at this, the QQQ. I think that's now. I don't think this is an F. I think this is more like an F/B, an alternate count, because the technicals are still very strong. It doesn't have any characteristic yet of an F. If it will, if the weekly chart by next week closes under 288. All of a sudden, I'm looking at this and I'm saying, whoa, not good at all. But so far, it's acting very well. So you want to see, I'll go to the NQ. So if you want to look at the NQ, trying to fill yesterday's, this is the Chapman Wave inverted Roman candle. So if you can see at any point for an hour and a half, I'll make it an hour. For 1 hour, if the NQ is able, this is a continuous contract, is able to hold above 12,980, it should try to test yesterday's high. That's going to be if it closes under yesterday's low of 12,678, that's not good action at all. So I've got my parameters. We're looking at all these different things. And once again, the SMHs are moving nicely pre-market, up 4 after having a very sharp turnaround. So I'm looking at this, and if I want after 2 o'clock. If after 2 o'clock, the Dow is able to hold an 85-point gain, and the S&P is able to hold a 22 or 25-point gain, I think that could see a nice close. That's going to be important. But being weak after 2 o'clock is not a good sign. Have a wonderful rest of the day. I will not be here tomorrow. I'll see you back here on Monday. Check out Pro Stay tuned for great programs.